What's going on, guys? Just throwing together a quick video. I didn't post a video yesterday. I've been pretty busy with work. I have some shit going on in the middle of a demo job. So I got home from work yesterday. I was beat, just not in the mood to make a video. And then today I'm charting, getting ready to make a video, and people are commenting on my older videos. Where are you? Are you going to update? Like, yes, I'm going to update. I'm going to continue making videos. I don't have to make a video every day, especially yesterday. Yesterday was very boring, not really much to talk about. With that being said, let's just jump into it. So starting with the macro on SPY, once again, descending broadening wedge for a year, broke it to the upside, retested twice, reclaimed the ascending triangle that we have here. This ascending triangle, you reclaim that, very sideways here. Before breaking out of it, you find a gap from that breakout, and then some more upside. And then 444 was the local high, double top there. We haven't seen 440s on SPY in over a year. By the way, we haven't seen 440s since April 2022. So very bullish from that 444 top, double top there, and then some downside, getting a pullback here. 58 days in a row over the 200 EMA now, closing over the 200, and the golden cross on the daily. Very bullish. Jumping into the symmetry on SPY once again. Blue box would be your middle. You have your lowest low here. Here's your middle. One break above the ascending triangle here to retest the macro of the wedge. Coming into the red, you break below this horizontal line at 380 in both. Break below here and a break below here. This came slightly lower to retest the wedge as well. From there, you bounce up, reject 418 on the dot. Same thing right here. From there, you come down to 380 on the dot, find a bounce. Same thing right here. And then up to 430 where you have 3 touches on it. Over here, same thing. And then you break out of that, hit 438, retrace there, and then break through. 438, retrace, break through, and now we're seeing a pullback here. So the symmetry is perfect, but now the question is, and there's 2 scenarios here, was 444 the equivalent of the 450 move we were looking for? That's possible, and from 450, theoretically, we were expecting to come back down to 438, establish support there before moving higher. It is possible that 444 would have been the equivalent there, just didn't come as high, and now we're going to come down and form support, and it would likely be slightly lower than 438. More than likely it would be 429, 430, coming back down to this range here and establishing support on top of this horizontal line that I have drawn here. That is one scenario. The other scenario is that we just find a bounce here, and I'll get into that in the next slide, the uptrend on SPY right now. The other scenario is we break this descending resistance that we have here and just keep heading up to 450. So both of those scenarios are on the table. We'll just have to see how it plays out. Nothing has changed here. Very bullish. Very symmetrical move. Perfectly symmetrical move. Broke both macro patterns to the upside. The wedge and the ascending triangle broke both to the upside. Looks very bullish. So this looks very good. The uptrend that we have on SPY now, and this would be your ascending triangle, the top of it. Have a fake out here, come back down, bounce off the support one more time, takes you to your breakout, your retest here, and then this yellow line would be the bull trend on SPY, where we have multiple touches, 1 here, 2 there, break below there actually, come up, touch it again, slight break below, touch it again here, the Fed speech here, touch it right there, touch it again here, and then you have 440, 444, and then from 444 we've seen downside, and we have this descending resistance on SPY now. Actually broke below the bull trend. I'm not worried about that in the slightest. I'm expecting SPY to see new highs, in the near future. So I'm not worried about this at all. From here, the 2 scenarios, as I previously mentioned, is we could either break this descending resistance to the upside, reclaim the bull trend, and head up to that 450 range, or we come back down to 429, 430, and establish support here before moving higher. That is possible as well. This does look like a head and shoulders here. So I wouldn't be surprised to see that, some downside back to 430 before moving higher. Also wouldn't be surprised to just break this to the upside, reclaim the trend, and then head towards 450. We have to just see how it plays out. So that's that. I haven't touched on this in a while, so I figured I'd throw this in here. So on the left, these are both SPY. It's a split screen on SPY here. On the left, this is leading up to AMC squeezing in January 2021 here. And then this would be the current the retest of the descending broadening wedge right here, and then the breakout of the ascending triangle. I mentioned a while ago that SPY played out this move here where you have this resistance line drawn across here, the yellow, same as here. So you come down and you form this W here, more or less a shelf on the side of this move that we do here. Come back up to resistance. Over here, you didn't come all the way back up to resistance, but then from there, you come down even lower and then form another W, which we did. And then from there, you bounce up to the resistance, reject it, and then form a higher low. So from there, you bounce up to the resistance, reject it, form a higher low, and then you just start gapping up. You have all these gaps here that take you to this channel. Over here, same thing. You just start gapping up, get all these gaps up to the top of this channel here. And I mentioned, this had to have been weeks ago by now, that from this breakout here, SPY was in this ascending channel for an extremely long time. This pretty much took you to all-time highs on SPY. We're just in this channel the entire time. I mentioned every time you break below the channel, you reclaim the channel. And so from that touch on the top of the channel, the first touch that you get, that to the squeeze January 27, 2021 was roughly 80 days. From the top, the first touch on the top of the channel here to the June OPEX date, which would be next week, is 85 days. So 80 days, 85 days. This could be insignificant. Maybe it's not. I figured I would just throw it in here. Obviously, this isn't playing out the exact same way. This was an ascending channel that just took you to all-time highs on SPY. Over here, it looked like it was going to play out the channel the same way here. And then we got all this movement. And, you know, that could be expected because over here was just a channel. Over here, we had an ascending triangle. And, you know, this would have been the breakout here. And the move is playing out symmetrically as well. So I wouldn't really expect it to play out the exact same way. But I figured just throwing in the pattern that it played out here before breaking that to the upside, you get all these gaps to the top of the channel. Same here. And then from there, it was roughly 80 days until we squeezed January 27th here. And then from the top of the channel here until the June OPEX date, 85 days. Not sure if there's any correlation or significance there, but I figured I would throw that in. So that's that. Now jumping into AMC, nothing about the macro has changed. Nothing has ever changed about this macro. So COVID, January 2020 here, you drop down to the three fractal sequence, the green, red, and blue, which takes you to the squeeze in January 2021. From there, you come down, you form an uptrend, which takes you to the June squeeze. Play out this flag, you break down from the flag, and then reset back into the green, red, and blue. So we're playing this out once again pretty much perfectly, the only difference being that we're descending. So underneath would be the blue box right here that took you to the squeeze. Took you to the squeeze January 2021, and then over here is the blue box of what will be taking us to our squeeze, which is just taking longer to play out. So once again, first bottom, try peak, second bottom, lower low, uptrend breaks you out, retest, squeeze. First bottom, try peak rejecting resistance, second bottom, lower low, uptrend breaks you out, retest, squeeze. That's what we're looking for. So with that being said, jumping into the macro time again. So this would just be my macro perspective on both sides. This would be leading up to the squeeze January 2021. I mentioned that this green, red, and blue pattern played out completely flat the whole time. The bottom was the bottom here. Is very flat pattern all around. And then we're playing it out the exact same way, except descending. So the green, red, and blue here is the same thing that we're seeing over here. Slight differences. It's obviously never going to be perfect, but it is the same thing, and it's the only difference here is that we're descending. So once again, the time of each iteration that we've seen here, the green box over here leading to the squeeze in January 2021, 111 days versus 118 in the current cycle, 1-to-1 there. The red box, 83 days over here versus 131 days over here. A little bit slower than 1-to-1, but roughly 1-to-1. And then the blue box here, 148 days versus 316. Twice as slow, 2-to-1. And I mentioned multiple times now that the ape dividend dropped in August, roughly at the start of this blue iteration here. And apparently had some kind of effect on the algorithm where we're tracking slower now. It's not an issue. We're still tracking perfectly. The macro hasn't changed. We're just tracking twice as slow now. No big deal. I also mentioned that each iteration, green, red, and blue, it comes up on the other side. So the green, you play out this W, it's more or less a W, a lot of chop there. But you come up on the other side, same thing over here. This chop here, more or less a W, you come up on the other side. The red is more or less a cup, come up on the other side. The red is a cup over here, you come up on the other side. Then the blue is more or less a W with the tri-peak, and then that took you to your squeeze. The blue box coming up on the other side of that took you to your squeeze, and then now, which is what we're expecting, is that we're going to come up on the other side of this, and that will be our squeeze. And I mentioned that this is curling to the upside. So you could even see the curvature here. It's very clearly curling, very flat here on the bottom, and then curling to the upside now. So again, each one comes up on the other side. The blue one was your squeeze. Same thing over here. We're just waiting for this blue one to come up on the other side. So that will be taking us to our squeeze, more than likely, in my opinion. Just taking a very long time. Not a big deal. Just waiting for this to happen. We're almost there. So that being said, jumping into the trend angles. Once again, this would be the blue box of January 2021 on the left, and on the right is our current cycle. From the top of the blue box down over your tri-peak where you find your breakout retest, minus 42 degrees over here. Same thing over here, minus 42 degrees, start of the blue box, down over the tri-peak where you find the breakout and retest. Same thing there, low to low, 176 versus 178, low to low. So pretty much the same trend angle on the bottom as well. 2 degrees off on the bottom. Up top is perfect. Here's your tri-peak. Here's your tri-peak. Here's your first bottom, your second bottom, which is slightly lower, your first bottom, your second bottom, which is slightly lower, and then your uptrend that breaks you out, and the retest. I mentioned that we're descending. We're tracking this perfectly. We're just descending. So with that being said, the retest would be descending. Even from the bottom here, you come up, and then you come down and form this pattern here, which is very flat on the bottom. Actually, a slight uptrend here. Over here, played out very similar from the bottom here. You come up and you're playing out this, it's pretty much the similar move. The only difference being that this one is descending. This one is ascending slightly, pretty much flat, and this one is descending because we're descending. We're tracking this in descending fashion, and then that broke you out. Here was a gap up that broke you out. I mentioned that the support resistance of the current cycle is very tight. Very tight support resistance here compared to what we saw back here. This had room to gap up here. Here we didn't have any room to gap up. So I'm just touching on how we're descending again. That's pretty much what I'm showing here. One other thing I did want to touch on is that on the daily we have this resistance and support. So it's possible that this was the macro breakout. It's also possible that this green line here up top would be the macro breakout. Either way, on the bottom we have the support from the January lows. This is where I made my channel on this gap up here. And since then, again, we've been very flat, completely flat line now. We're just not moving, not really moving up or down, you know, other than the tri-peak. We had some volatility and saw some upside. To the downside, we've been flat. We actually have this uptrend going. Perfect wicks there, perfect wick there. You have the break below here on the after hours knife that we got, 1 day below, and then you gap back over it. And then you have a perfect touch there, and then pretty much perfect touch here as well, double bottomed. Yesterday was actually slightly lower than today. Very nice double bottom here. I'm expecting to find a bounce here. I would not expect to break below the support at all. So I'm expecting to find a bounce here. Does it have to be a volatile bounce? No, but we should start seeing some upside here, in my opinion. And then on the upside, we have this resistance line. So you have your first touch there, you have one touch there, you have a break above in the third peak of the tri-peak. Pretty sure we got halted here anyway, which makes sense. Come back down to support, and just very sideways here. Another touch here on the resistance, a bounce off the support. Didn't come all the way to the resistance here, and then another bounce off the support. So this is getting, the support resistance here is getting tighter and tighter by the day, and we've pretty much just flatlined. Since January, the January lows, you know, we've just been completely fucking flat here. The apex of this support resistance is July 21st. I'm not saying we're going to make it to July 21st just trading flat here. But I'm just pointing that out. That's the apex, July 21st. And then I also mentioned that this pattern here, kind of like a star bottom, that I thought I saw it somewhere before, and I mentioned that it was possible it was HKD. It actually is HKD. HKD played out a very similar pattern to this right before it squeezed. The same thing with the knife. It knifed, and then it found an uptrend. Played out very similar to this, and that took HKD to the thousands. So this pattern here that I thought I saw before, it actually was HKD. It's playing out very similarly to what HKD did. So again, this is just showing the daily. This is the blue box also. So I'm pretty much showing you what I'm trying to show here is, again, each iteration comes up on the other side. And then over here, same thing, and we're in the middle of the blue one, almost at the end of it, so curling to the upside here. And this would be taking us to our squeeze. And then the resistance lines that I have drawn, as far as correlation, The top of the blue box over the tri-peak. Same thing here. That's where the trend angles come from, where you find your breakout and retest. There's really no other resistance lines that I can draw on AMC on a macro level. There's really no resistance. So as far as the blue iteration goes, this is the only resistance line that we have left to break. And we are curling to the upside here. So we have this support, we have this resistance, and we are curling to the upside. That's that. Now, as far as landmarks go, and I'm getting into the micro tracking now. I'm going to take a step back from the micro tracking for the remainder of this week. I am expecting some upside, more than likely tomorrow and possibly Friday. If not, like worst case flat, I am expecting to find a balance from where we're sitting at right now. But I'm going to take a step back from the micro tracking because, like I previously mentioned multiple times, the micro tracking is impossibly hard. If anyone was watching the live stream that I did on Friday with a buddy of mine, Sokatoa, he said it himself, tracking on the micro is just insanely hard because the algorithm repeats fractals over and over again. It's just a repeating move over and over and over again. And tracking on the micro, and this is his words, you're looking at a pattern inside of a pattern inside of a pattern. So it's very easy to get lost, especially when it's all looking the same. So just as far as the macro goes, and this does not lie, the landmarks in the macro do not lie. The micro can be tricky, but the macro does not lie. And I have these boxes labeled here. This red would be the first bottom that you get, same here. And then you get the tri-peak, same thing here. And this trend angle, this trend line that I have drawn here, actually it's pretty much the same angle as well. The trend angle I believe is like 45 degrees here on both sides, pretty much the same thing. So here would be your tri-peak in the yellow, and then from there you come down to your lower low as we did here, and then I mentioned before this trend angle is the same as this one pretty much, 2 degrees off there. Trend angles are pretty much the same here. From that lower low that you get, you bounce up, and then you get this pattern here, this boxy type move that, and I mentioned this already in this video, from the lower low you get this bounce up and this boxy type move. This one was flat because this macro was flat, January 2021, so this was flat. And then this one was descending because we're tracking this in descending fashion. And then that would have been the breakout, and then this would be the iteration that we're in now in this purple box here. This flag, more or less, that took you to your squeeze. Now, I mentioned for the past month that we'd be playing out a W in a descending fashion, and it would take forever to play out. That's exactly what we got. From that 515 top that we saw, we've now seen downside. Now, said I'm going to take a step back from the micro, but I just wanted, and this is just, I'm just theorizing here. This is just zoomed in now on, hold on a second. So we're just zooming in now on the purple boxes here. So the January one here, and then the current, zooming in on that. And this is just, I'm theorizing here. This W that played out here, again, was flat because the macro was flat, and then that would have been your double top right here. Slightly higher double top that you get there. And you actually do get downside from that, double top that, and then you get downside again, and then from there you gap up. And again, just as a speculation, I'm theorizing, because the W that we got, descending, symmetrical, if we're talking about a descending W, theoretically, this finished playing out. This would be the first leg of the W and the second leg of the W, played out pretty much symmetrically and descending. It is possible, and I'm not saying this for sure, but it is possible that this was the double top that we were looking for, that $6.50 to $7. Theoretically, if it was a descending W instead of flat, we wouldn't be going to $6.50, $7. And then that would have been the double top. Theoretically, would have been the double top before you get downside. Very flat here. You start forming some higher lows before you double top that move. And that's what we got. Yesterday we saw some downside on AMC. Today pretty much flat here again, double bottom, slightly higher here. I'm expecting to find a bounce here, and you know, like I said, I'm going to take a step back from the micro tracking for the remainder of the week. What I would like to see from here is potentially a double top at 515. So a bounce here and start climbing back up to 515, double top that, and then theoretically coming back down one more time. I'm just going to see how the rest of the week plays out. And go from there. But like I said, as far as we're looking at this on the macro, as far as, you know, landmarks that have to be played out, green, red, and blue, green, red, and blue. As far as landmarks go, the first bottom, tri-peak, second bottom, we already got it. And we'd be somewhere in this uptrend here that took you to your squeeze. So we already got the second bottom with the lower low, and then we'd be in this uptrend somewhere that took you to your squeeze. So here's the lower low, and then this uptrend now. Again, we're descending, but we are curling to the upside here. So as far as the macro goes, there's really not many landmarks that have to be played out, if any at all, considering we got both bottoms and the tri-peak. So we're just going to see how the rest of the week plays out. I want to see upside here and potentially a double top at 515. I'm just going to see how it plays out for now. But nothing has changed. Everything still looks good. Once again, just showing APE really quick because this is from late March until today. APE here in this pattern, this triangle, very flat. Very, very barcodey and flat, other than this spike here. Very, very sideways price action, holding support, rejecting resistance. Very flat here. Broke out last week to the upside, and then came back down yesterday to test, confirmed it, and then found a bounce off. This looks very good. And so APE has broken its macro pattern, and like I just showed before on AMC, I'm not expecting any downside. Like I said, we should be forming higher highs and higher lows from here on out. And what I mean by that is we're not forming a lower low coming back down to $3. We have this uptrend here that should be taking us to our squeeze. So I don't see AMC coming back down any lower here, and APE has broken its macro pattern to the upside and tested on it. Theoretically, we should be synced up with APE now, and APE looks like it's ready for some upside, so we should be expecting some upside here with AMC as well. So, I mean, theoretically, once again, this descending W could have played out. This could have been the double top. If you turn your head, this W played out fully. And like I just said before, that from that double top that you get downside, double top that, come back down one more time, and then you gap up. So again, we'll just see how the rest of the week plays out. Everything looks bullish still. I have no complaints. SPY looks very solid. GameStop has an uptrend. It's curling back up to the upside. And AMC double bottom today very nicely, formed a slightly higher low, and actually formed a higher low than the previous low that we saw back here from the confirmation. This first low that we got yesterday is a higher low, and then today was even a higher low than yesterday. So this looks good. Looks like we bottomed here. I'm expecting to see some upside, decreasing volume on the daily. Looks good. Looks very good. No complaints. So with that being said, that's the video, and I will catch you guys in the next one.